Welcome back. TD Bank is out with a report on the Canadian rental market and its outlook for 2025. TD says growth in rents in Canada will continue to cool this year based on several factors. Let's find out what those factors are. Joining me is the author of the report, Rishi Sondhi, economist at TD Bank. Rishi, thanks a lot for joining us. You're calling for rent growth to slow down to a range of about 3 to 4% growth in 2025. How would that compare to rental growth that we saw in 2024 or very recent years?
Built space, our forecast is for rent growth to slow to about 3 to 4% this year. That would compare to a 7% increase in 2024 and an 8% increase in 2023. So quite a significant slowdown is likely in the rental space this year, both in purpose-built space and for condos.
What is the purpose-built space, by the way?
Yeah, so purpose-built space is basically units that are constructed for the sole sort of purpose of being rented out, as opposed to condos, which are sold to people and may or may not be rented out, right? So again, the purpose-built is more geared specifically towards that. Whereas if you move into a condo, you can either rent it out or not, right? And both of those markets do have different dynamics typically that characterize them. And Canada's rental stock is more made up of sort of the purpose-built units, that for example, saw huge construction in the 70s, for example.
My next question was, what has been the trend in purpose-built rental housing in recent years? A lot of people have called for more of it to be built, given the pressures we've seen in that market. Are we seeing more of it being built?
Absolutely. I mean, the construction stats will tell you that purpose-built rental construction has gone up quite a bit. In our view, that's a function of a couple things. First of all, rent growth has been extremely robust, and it helps if you're a builder or developer and want to develop a purpose-built unit. That's one thing. Second thing is that federal government programs, provincial government programs have sort of helped put the focus on purpose-built rental construction, have lowered financing costs with respect to delivering that purpose-built rental supply. So it's sort of been a 1-2 punch to sort of get that purpose-built rental stock increasing as it has the past several years.
One of the big factors at play seemingly is the dialed down immigration targets of the federal government. How big a factor is that?
Absolutely. I mean, that was, the big driver, one of the big drivers of the really robust rent growth that we've seen in recent years has been the really strong population growth that we've seen in Canada. Now, the updated federal immigration plan sees, immigration slowing, and they're targeting a net outflow of non-permanent residents, and, newcomers to the country typically rent when they first come to Canada. So this slowdown in population growth, which, by the way, is showing up in the data already, should put downward pressure on rental demand. And that'll certainly weigh on the pace of rent growth that we see this year.
A slowdown in rental growth sounds like a positive for people who must rent their accommodations. It doesn't necessarily equate to greater rent affordability because there are other factors at play. What does the affordability picture look like to Canadian renters right now?
Yeah, unfortunately, much like the ownership picture, it's quite strained. When our rental affordability metric would suggest that there was really no improvement in what was a strained affordability backdrop, last year. So unfortunately, not great news in that respect. Slower rent growth, of course, does offer an opportunity for incomes to sort of catch up a little bit. So we could see some, depending on how the economic outlook evolves, of course, and the income outlook evolves, we could see some improvement in rental affordability this year, particularly in the condo space, if condo rents do indeed, soften more than in the purpose-built space as is our forecast. But certainly at the moment, it's quite strained.
And everybody is looking forward to the inauguration of Donald Trump on Monday. Tariffs are the big story for Canada. It's dominated the headlines. All kinds of investment managers and forecasters are trying to forecast what steep tariffs in the United States on Canadian goods would mean to their particular areas of expertise. And even you have done that when you have done your best to forecast the Canadian rental market in 2025. What are the potential consequences of Trump's tariffs to the rental market here in Canada?
Obviously, the biggest consequence would probably be weaker economic growth in Canada, and that, of course, would hit rental demand. It does take in the purpose-built space. It does take a fair bit to get those rents turning negative. So, for example, in the global financial crisis, rent growth, purpose-built rent growth was still 1%. In the sort of the late 80s to mid 90s housing market meltdown that we saw in Ontario, rent growth was only flat. So it does take a lot to turn that rent growth negatives, but it has been flat sort of in recent-ish history, right? So certainly an outcome like that, or perhaps something even more severe, depending on how severe the economic backdrop turns out to be. We'll of course have more insight on that next week. So we're just we're eagerly anticipating that